Neeraj Chadawar is now joining us from Access Securities to talk more about earnings and other trends which he's picking up. Neeraj, thanks very much for joining us. Which are the sectors which stood out this particular earnings season in your view on the strength of the quality and strength and quality of the earnings?
Thank you for having me on show. We have completed Q3 FY24 earnings season, and that completed on a very robust note. And if we talk about the earnings for Nifty 50, so we marginally upgraded our FY24 estimate for Nifty 50, that is almost by 1.2%. Now we are factoring almost 18 to 19% growth rate in Nifty 50 earning for FY24. And from starting from FY23 to FY26, we are penciling almost 14 to 15% earning growth, which we had never seen in the last decade. If I talk about the sectors which stood out in the recent earning season, we have seen a good upgrades coming in from the automobile sector, good upgrade coming in from the oil and gas sector based on the higher realization. Along with that, some of the pressure was visible in the export oriented theme, which was on purely on an expected line.
Neeraj, what are your top ideas in terms of stock recommendations at Access Securities, specifically from the broader market, where earnings growth is good and valuation is only getting attractive because of the fall which we are seeing in this market?
So we are seeing currently market is purely a narrative-driven market. So what most of the positive factors are already priced in the market. It is purely a macroeconomic-driven rally which we had seen on a YTD basis. So from here onwards, we believe that the margin of safety in the broader market has reduced as compared to it is available in a large cap space. So we believe that valuations are very attractive as compared to broader market in the large cap space. So we are penciling two themes for the market based on the current scenario. Growth at a reasonable price and the quality will be the overarching theme, which will likely to deliver alpha in next 1 to 3 months going forward. So that's why we have a representation of 8 stock in our top picks recommendation out of 15. So right now we are very bullish on the SBI and Bank of Baroda in the PSU banking space. In private bank, we continue to like ICICI Bank. In consumption, we continue to hold in our topics the Varun beverages, and we continue to like Westlife food from the broader market. Currently, QSR team is under the pressure of volume, what subdued volume, but we believe that in next 1 or 2 quarters we could see the good amount of recovery possible in the volume uptake. Long-term story for QSR continue to remain intact.
What are your thoughts on the small cap end of the market? They are going through a good corrective phase. Do you have what are your small cap top picks?
So under the small cap, we like JTL Industries, we like Westlife Food, we like CI Automotive and PNC Infratech. So these are the four picks from the small cap universe. We continue to believe that they are the good franchisee and continue to see the demand momentum. Along with that, good amount of return ratios improvement in upcoming quarters. So we continue to like these four picks. And under the mid cap space, we like Lupin, Federal Bank and Credit Access Grameen. These are the three picks under mid-cap category. We are seeing the good recovery seen in the pharma space. The pricing war has reduced in the US generic. So Lupin is a good beneficiary of the new launches, and we believe that gross margin from here onward likely to improve. So there is current valuations are very attractive if we see at the long-term average. So we continue to like Lupin in the pharma space. Credit Access Grameen is a microfinance franchisee and the fastest growing franchisee and continue to be trading at a premium valuation as compared to its peer. We believe that growth rates are very compelling at this juncture. So the premium valuation will continue for the Credit Access Grameen.
What are your top sells? Basically, I want to understand which are the most frothy areas of the market or where valuations are not very attractive.
So I would like to say we have seen a good amount of rally in the broader market, especially in the mid and small cap space. The small cap index already rallied by almost 70% from the March 23 bottom, which we had seen last year. So in terms of that, the divergence has very widened between the large and the mid and small cap. So which we believe that this divergence will narrow in upcoming quarters. So flows will likely to shift towards large cap. So in terms of frothy valuations, some of the names under defense space, some of the names which has rallied beyond the fundamentals. So we could believe that there could be a possibility of time correction going forward. But the long-term growth story for mid and small cap continue to remain attractive because we have seen the balance sheet strength for majority of the corporate. We have seen the banking sector has improved significantly. The profitability for NSE 500, that is the last 4 quarter rolling basis, the profitability trend for NSE 500 has reached to 13 lakh crore, which we had never seen in the history. So, and that a lot of corporates has already done with the deleveraging. So only catchy part for the market is the valuation. We believe that they will the long-term growth story continue to be intact. There could be some time correction in the pocket, and style and sector rotation could be evident in next 1 to 3 months.
Right. All right, Neeraj, we'll let you go on that one. Thanks so much for your time. Bye bye.